Hi, I'm Osman Ahmed. I'm a limited partner at Accelerating Asia Ventures. I started off as an angel investor. I was investing in a number of different startups and realized that by deploying my capital specifically in small number of startups, I was concentrating my capital and my risk into those startups. And the general advice had always been to try and diversify your risk, even in high risk asset classes. So when I looked at the opportunity to invest in the fund itself, I saw this as the key benefit. Being able to invest in this high risk asset class, being able to get exposure to some of the leading startups in the region, but diversify at the same time across a lot more. There's very few opportunities where you can invest in 100 startups and minimize your downside risk. And for me, it was all upside for me. And that was the main reason for wanting to become an LP on the venture fund. I'm a co-founder myself, so I understand the risk and profile of founders. I come across them all the time. And for me, when I'm looking at early stage startups, I'm usually looking at the founding team, their capability, their ability to execute, rather than the actual solution that they've created. I need to understand the problem. Is that problem real? And are the founders the type of founders that are able to execute and deliver against solving that particular problem? And if it doesn't work out, do these people have the tenacity, the drive to pivot to something that's different and still keep the business going? Do they have the integrity to do the right thing for their investors as well as their own business ambition? So I have investments from very safe things like cash and gold and silver, and I think that's what most investors should be looking at. Then the stocks and the shares and the ETFs that we would typically look at. So they've all got their increasing risk profile. Gold and silver are probably the safest things that you can put money into. Stocks and shares have got their risk and their upside potential. And they also have their upside limitations too. And then right at the very end is where we see the types of things that Accelerating Asia Ventures is invested in. Startups that have got the potential to go hockey stick, return huge amounts, but they also carry the requisite risk as well. There is no such thing as a low risk, high return portfolio. The element is high risk, high return, but the fund itself is diversified enough, very much like the ETFs that I invest into. Diversified enough, give you the upside potential and minimize your downside risk. The fund itself sits at around maybe 5% of my overall portfolio value, which is about right. I have more confidence in Accelerating Asia Ventures fund than with others, mainly because I know all the other LPs. I've got to know them quite well. I understand and know the general partners really well. And so there's a high level of trust. And it also goes to show that I've invested in Fund 1 and Fund 2. Very little hesitation in me doing so because I understand the rationale behind the fund, what it's aiming to achieve, and its ability to deliver on the promises that they've made. So it sits at around 5%. Overall, venture investments are around 15%. So for me, I'd already invested in maybe 4 or 5 Accelerating Asia portfolio companies. And the general partner had approached me and asked if I was interested in investing in the fund. I actually didn't think it was an option that was open to me, mainly because my typical ticket sizes were around 25,000 US dollars. And for me, that seemed like an okay amount of risk to take per startup. So when I looked at the venture fund and looked at the ticket size that was required, it actually made a lot more sense to me. The opportunity presented itself when the general partner approached me and asked, you're investing in startups. Do you want to minimize your risk? Do you want to diversify that risk? And for me, that was actually what I was really looking for at the time. And so the opportunity presented itself, and didn't really need too much of a time period to actually consider that. It was exactly the type of solution I was looking for. Invest in high-end startups, have the upside potential, minimize my downside risk, diversify that risk. The ability of the fund to introduce me as an LP to the startup founders as well, and being part of that whole process of selection as well, gives me the ability to still be an angel investor, but as part of a larger fund. I get to meet the founders, I get to understand their business models, I can be involved involved as I want, or take a step back as well if I want. Whereas other funds, it's a black box. You invest in the fund and you find out about the fund performance maybe once a quarter without knowing exactly who's been invested in, which startups have been invested in, and having very little involvement in that process. And as an angel investor, I do like talking to founders. I do like understanding the problems that they're trying to solve. And for me, that's one of the reasons why I prefer the Accelerating Asia Ventures model over other funds which I've been approached to invest in. There are a number of unique things about the fund and the selection process which really stand out. One is that we have the selection week for LPs to get involved in on. So if you really want to meet those founders, you can really get involved in that selection process, meet those founders. You don't need to spend too much time on it if that's your preference. But for me, I'm typically volunteering to go and talk to as many founders as I can. But it gives you massive exposure into the types of challenges that are currently being faced out on the market today. And that's great for me. I really like that process of being involved in selection, being involved in meeting the founders, and then providing that feedback to the general partners and seeing that being a method to influence the selection within the fund. As an investor, I would typically have real problems of trying to filter the types of startups that I was interested in. You're pretty much restricted by inbound approaches and cold approaches from people on LinkedIn. And sometimes it's very difficult to qualify that particular element. The good thing about Accelerating Asia, there is some due diligence that's done that allows you to then see that deal flow as qualified. You know that other people have already looked at it, and you've already gone through a process of filtering down 500 startups at the start of an application process, that by the time I'm looking at them, we're down to about 30, maybe 40. So I've already filtered out the outliers and focusing on the ones which really have high potential. There have been a number of times where I've actually felt that this has been the right thing. One is the types of startups that you get involved in. Some of them have really just skyrocketed, and knowing that you're part of that fund, you're part of the investor profile in those startups means that it's something to be proud of, and you can usually showcase that to other investors and to other startup founders. The other thing is really around the involvement. The more exposure I have with other startups through the selection process means that I'm getting that experience that I've always needed. I'm a person that learns by doing. I don't like theoretical education. So for me, being involved in the investment process, the due diligence process, gives me the experience that I've always craved for. If I've met 500 founders and worked through them, that's the experience that I've always looked for, not just I happen to be really lucky and met one founder and invested in them and I made it out there. So for me, just the entire selection process has given me the experience I've needed as an investor. Lots of involvement. The general partners are really approachable. It's not just a hidden fund vehicle. You get to see the details whenever you need them. General updates are done quarterly. Gives me the insights that I need, and also gives me an outline and a view as to what the returns are going to look like in the longer terms. you're as involved as you want to be. It gives you an opportunity to be exposed to the startup scene in ways that you don't normally get to be exposed in. And that gives you the experience that you would want as an early stage startup investor. The founders get to know one another. They're all bouncing ideas off of each other. So they're not just discrete investments made by the fund. They're discrete investments that we've nurtured and we've built together. We've helped the founders develop themselves, develop their capability, and other founders that are involved in that feedback loop. And it's not just within that cohort. As an LP and as an investor in the fund, I'm also able to see other startups within different cohorts, and we're always constantly introducing them to each other, so that there is that genuine feedback loop between different cohorts. One startup in cohort 2, for example, would benefit from being a customer to a startup that we have in cohort 11. We make those introductions. It's a qualified introduction. Everyone's very warm and welcoming to it and open to the idea of actually building each other's value up. And so we see huge amounts of value in that. I personally have seen introductions made where if they weren't involved in the fund, they wouldn't have been able to connect those dots and benefit from that. There have been a number of really good startups that we've brought through the program where they've done the hockey stick after they've gone through the program, but also when we've been talking to the founders, we've been able to do those introductions, and they've just genuinely improved on their business model during that program. People are now refocusing on regions and on technology. You just need to look at what's happening in the market today. Investments are going into AI, but it's just blind money just going in. We've put an AI into the name and now everyone's investing in it. Now's the right time because people are refocusing on the startups that are looking at the next generation of businesses that are going to take the enablement of AI and actually apply real practical solutions to it. So now I would say is the right time to invest in startups in particular and in a fund that's looking at the region. Transparency, integrity, diversification. Those are the 3 words that just jump out at me in terms of why would you invest in an Accelerating Asia Ventures fund.